All right, good evening, everyone. Welcome to our online webinar sponsored by Zen Phoenix and organized by Everything Trading. Now, before we get started, I would like to introduce myself. My name is Benjamin. I'll be MC for today. Okay, 1 minute. All right, so also, guys, I'd like to say thank you so much for those of you who actually make it here tonight. I know that it's actually quite a jam session. Everyone was busy with work, and today is actually a working day. So thank you so much on behalf of our sponsor and our organizer. Now, before we get started, just some disclaimer. Everything Trading was formed in 2018. We actually created a platform for traders at every level. And also, those of you who are joining our community for the first time, you can actually join us and get access to our Everything Trading for our trading resources. And the content tonight is actually shall not be construed as investment advice. This information is meant to be for education purpose only. All opinion, news, analysis, price, or other information is provided as general market commentary and not as investment advice. And also for those of you who haven't put your mics on mute, please do so. We wouldn't want any background noise. And also please refrain yourself from recording tonight's session. We wouldn't want any of this content to leak out, as we would like to keep the session as private as possible. Thank you so much, ladies and gentlemen. And also for those of you who do not know who our speaker tonight, Daniel Ang, is, well, he's actually a seasoned trader with over 38 years of experience in the financial market, and he specializes in futures, option, forex, CFD, and even cryptocurrency. And for those of you who do not know, he actually also have published his recent book called The Accidental Trader. For those of you who are interested in reading more about the financial market, I do hope that you guys can grab this book because he has a lot of insights on the financial market that you can't get anywhere else. And also, recently, Daniel have also been awarded WikiFX as the most influential Forex mentor by WikiFX in 2023. So I do hope that you guys can learn a lot from Daniel here tonight. The topic tonight will actually be on the case of buying precious metal. Now, for those of you who are interested in trading precious metals such as gold, such as silver, this will actually be a good opportunity for you guys to learn more on that. And probably you guys also have questions like, are your investment strategy prepared for slower economy growth? And also, should we explore trading opportunities with metal in this current period? Well, ladies and gentlemen, we are about to find out here tonight. So without further ado, I would like to introduce you all to our speaker here tonight, Mr. Daniel Ang.
Good evening and welcome to this evening of presentation. My name is Daniel Ang. Ben has introduced me pretty well, but he forgot to mention that I used to be a gold dealer. So that was back in 1989, and that was a long time ago. So I know a little bit about gold. So today the topic is going to be about precious metal, not necessarily about gold itself. Now we are living in extraordinary times because since the pandemic, life have been turned topsy-turvy. We all understand that we can't go back to normal anymore. But what's in store for us in the immediate future? Whether it is our daily life, whether it's our career, whether it's our investments, everything is going to change. And what changes will precious metal bring? And why do we talk about precious metals in this presentation? Because everything that we are experiencing over the last 2-3 years since the pandemic, and of course we also have the war that's ongoing in Ukraine, definitely is causing a lot of upheavals in financial markets. And of course we also want to know what the various financial instruments can do to us and how are we going to play our hands, so to say. Okay, now without further ado, let me share with you my screen. Now, if you can allow me to share my screen with you, hope you can see my screen here. Right. Okay. This is the topic itself, the case for buying precious metals. So, of course, there are many things in this basket thing called the precious metals. Today, we're going to narrow it down to just gold and silver, and we're not going to talk about platinum or palladium or the other precious metals. Of course, if you are interested, we can always talk about it during the Q&A session. Okay. Now, of course, we want to get something off the table. We want to clear this. Now, this presentation is not an offer to buy or sell any kind of instruments, be it gold, silver, futures, FX, doesn't matter. So the thing is that the trading of any kind of margin products also involve risk. So do understand your own risk tolerance before you actually engage to actually trading margin products. And of course, there will be a segment in which I will be giving you my views. And those are my views, and it's got nothing to do with the organizer or the host. So therefore, we will not be responsible for any action that you may take as a result of attending this presentation. Now, with that out of the way, let's get started. Now, this will be the content itself. We all know last year, there was a lot of news about central banks buying a lot of gold. In fact, they have bought so much gold. It is the biggest amount of gold central banks has ever bought since the 1950s. Okay, that means to say after the World War II. This is the first time we have seen so much central bank in the market basically buying gold. And we have seen how gold prices has gone beyond $2,000 per ounce. And that was a record high as far as the spot market is concerned. So what is causing all this frenzy to buy gold? There must be something that's happening in financial markets or about to happen in financial markets that cause central banks around the world to start accumulating this amount of gold. And it was reported that more than 1,000 tons was actually being bought by central banks. And now we all know every year from what you could mine, okay, we don't have this infinite number of gold that can be bought at any one time itself. So that is causing quite a bit of buying frenzy, yes, especially in the London spot market. So when we talk about gold market, there is two big markets here you have to understand. One is in London, which deals with the spot prices, means that most of the delivery is done in London. Okay, London is still, after all, a premier gold trading center. Now, the other center for trading of gold is obviously in New York, specifically in the exchange called the Commodity Exchange based out in New York. For short, we call it COMEX. Now, COMEX deal with derivative, essentially futures, options, and those markets are actually a different animal from the one that has been traded in London. Okay, whereas most of the deliveries are done in London, and most of the hedgings are done in New York. So one is purely for buying the physical or selling the physical. The other one is basically mostly for speculation, for trading, and mostly for hedging. So very little activity in New York market in COMEX actually end up in delivery. But last year we saw something extraordinary. There was a lot of delivery in COMEX to the point whereby their warehouse at one point was actually running low on stocks. Okay, so that is the background in which we have actually witnessed. Now, what is causing all this frenzy to buy gold? Of course, last year we have the ongoing war in Ukraine, and then of course something happened during the war. At the beginning stages of the war, we have the West sanctioning Russia for invading a territory that doesn't belong to them, and that is causing a lot of dislocation in the markets because the sanction that follows actually dislocated some of the financial markets over here. Okay, then of course, who are the major buyers? You'll find that most of the major buyers are the emerging markets, not the richest nation in the world, but the emerging markets buying a lot of gold. We have China, we have Russia. And both these two countries do produce gold of their own, but they still go out in the open market to still accumulate gold from the open market. And then we have countries like Turkey, we have Qatar, we have the UAE, even Singapore is in the mix. at the beginning of this year, Singapore was in the month of January, Singapore was the largest gold buyer. So what is really happening? There must be something that these central banks know that maybe we do not know. So today we're going to talk a little bit about that. Now, India has traditionally been a major buyer of precious metals, and last year they were the biggest buyer of silver. So these two particular metals here has been in the focus. Okay, and the other thing that's also happening is this thing called de-dollarization. So exactly what is happening here? There are countries and economies are trying to sanction-proof their economy after what they saw the United States did to the Russian central bank's reserve. Basically, they seized those dollar reserves held by the central banks of Russia. And mind you, Russia central bank is a sovereign fund. I mean, you say that that is somebody's country's reserve. You just don't seize those assets just because they are in dollars. And because they did, that is the reason why every nation is trying to sanction-proof their economy by pivoting away from dollar and the Western financial institutions that they instituted, including the SWIFT payment system, and of course the dollar itself. And how do they do it? They have been doing it in a very, very obvious way. Basically is to reduce their exposure to the US Treasury markets by selling US Treasury. And that is, of course, what we are looking at right now, okay? Now, the other thing that we are also looking at is, of course, earlier on, what is causing all these nations to suddenly wanted to buy a lot of gold? I just mentioned because of the sanction imposed on Russia and the seizure of Russia's asset in the form of their central bank reserve amounting to something like $300 billion worth of assets. And those were just simply be taken away, okay? And we also see that the world actually set up and took notice. If a central bank's reserve can be confiscated, so to say, then what if tomorrow the United States is not very friendly to your own country? So everybody saw that the risk because they have weaponized the financial institutions, okay, and they also weaponized the dollar, and every country that has exposure to the dollar and to the Western instituted financial systems that was set up post-World War II, everybody is trying to find alternative to the point whereby they are also organizing their own reserve payment system, and they are trading among themselves in their own currencies. So this is to avoid dealing in dollars, okay? So if a country A and country B start to trade among themselves, bilateral trade are settled in either one of their own currencies instead of the traditional US dollars. Now, US dollars has always been the settlement currencies for international trade, whether you are trading among yourself with no involvement with the United States, but you still use the dollar as a settlement currencies. Whether you are buying crude oil from the Middle East, you settle your payment in dollars. Same thing, whether you are buying gold, you're selling gold, you also are based in dollars. So we can say that it is worldwide movement that has been gaining steam to divert away from dealing in the dollars. So right now, a lot of people say that, oh, gold, I understand why gold went up. Over the last year, we also saw very, very high inflation. We saw worldwide inflation has been rising, but of course, it has come down from its peak. Most of the major economies have seen their inflation, some in the double digit, especially those in Europe. We have seen those numbers, but it has since come off from the high, but it's still very, very high by historical standards. So a lot of people say maybe this time gold should be performing its role as a hedge. But we have seen that gold has not really performed that role as an effective hedge against inflation. So if gold price ever go up, it is definitely not 100% due to inflation because it has lost that magic, okay, so to say. And the only reason why gold can go up is due to something else. And we will also talk about that in this presentation here, okay? One thing here we also heard of is rising global indebtedness. We're not talking about individuals, we're not talking about companies, we're talking about countries. every major countries, developed countries in the G7, in the G20, they all have insane amount of debt that has been accumulated over the years, especially after the 2008-2009 financial crisis, and then during the pandemic, and then during this most recent war that we have seen is still playing out. So you can see that the world has been swimming in debt. Okay, and of course, not too long ago, if you remember, just about a month ago, about this time last month, we were still talking about whether the US is able to lift their debt ceiling, whereby they can continue, allow them to borrow some more. So that drama actually was playing out over a couple of weeks, and the market was talking about the possibility that the United States may actually default on their debt, and that did not quite turn out the way, because we have seen this many, many times. In fact, since the 1960s, we have seen almost 80 times in which the debt limit has been reached, and always at the last moment, they always come to an agreement either to lift the limit or to suspend the limit temporarily. So the deal that we heard at the beginning of this month was that the US debt ceiling has been suspended until the end of 2024. And we all know what happened in 2024. We're going to have a presidential election in the States. And for the benefit of both parties, which is the Republican and the Democrats, they don't want to deal with this issue. So they say, okay, never mind, let's suspend the debt until after the election. Then we'll see who wins. And then whoever is the candidate, whoever won the presidency will have to deal with the problem. So this is not the best way to deal with a problem, because basically you're kicking it down the road for somebody else to handle. And this has always been the case as far as the United States is concerned. So globally, the amount of debt is in excess of 300 trillion. Now, 1 trillion is 12 zero. So get it wrapped around your head. How much is $1 trillion? It's a huge amount of money. 303 trillion, it was estimated. And of course, it has been going up. Now, US debt before the debt ceiling suspension was $31.4 trillion. That is just America alone. So America accounts for 10% of the global debt, and that debt is still growing. Okay, the other one that has on the percentage basis based on their GDP that has more than the United States, of course, Japan. Japan is in a world of hurt all by itself, and we are going to hear how the Bank of Japan is going to tackle this problem. There were already a lot of hints going in since the start of this week about the Bank of Japan maybe looking to intervene in the currency market, because the yen is dropping like a rock. Okay, and as a country, you cannot allow your currency to drop like a rock, because after all, there is some value behind it, right? So over by some estimates, the IMF did a study, and it says that from 2020 levels, the amount of debt has gone up or was at $226 trillion. So we can see between 2020 and 2022, okay, the amount of debt has gone up by something like $70-odd trillion. And that's very scary, because there's a very compressed amount of time to accumulate so much debt, and this debt level is going up. Today, the US debt from $31.4 trillion has already gone beyond $32 trillion. And that is only days after they suspend the debt ceiling, with more to come, because the US Treasury is going to roll out more US Treasury to be sold in the open market, and that means they are trying to borrow even more money. Okay, so this is the reality that we are facing, and that will have consequences in financial markets, regardless of what you trade, whether you have exposure in equity markets or whether you have exposure in let's say foreign exchange, because of your trading with another country, your trading partner is from another country, you are exposed to foreign exchange risk. All this will impact. Okay, then of course the main thing is that most government out there, especially in the G7 economies, has been fiscally irresponsible, meaning to say they have been spending more than they collect in taxes. Now, one of the way in which government can raise revenue is through taxation. And we all know every year the tax receipt has been falling short of their budget. So we can see that they have budget deficit. And for those shortfall, the only way they can bridge the gap is to issue debt instruments. And this is what we are also seeing over the last few decades, it has been the same case year in, year out. Okay, so this is going to cause a lot of instability in financial markets. So like I said, we are living in extraordinary time, and all these are something that we all have to be aware, because we are definitely going to go through some very, very challenging times. Okay. Now, we talk about US. US national debt is already at $32 trillion, and it's likely to climb even higher. And by 2030, okay, this debt is likely, at the current trajectory, it is estimated that it will hit $50 trillion. Now, let that sink in. That's another 20 trillion more on top of what they are already accumulating. At some point, this mountain of debt will have to collapse. Okay, if nothing is done, this debt is almost impossible to repay. Now, somebody have ever asked Warren Buffett, okay, what do you think about the US national debt? How are we going to solve the problem? You know what Warren Buffett has actually answered? Let your grandchildren settle it. Meaning to say that this current generation will not be able to settle it. The next generation may not even be able to settle it as well. So there is a risk that the US may not even want to pay. Okay, so this is the situation we are in. And how can the US continue to accumulate so much debt? And how can the world continue to lend US so much money, knowing that the debt is almost impossible to pay out? Now, that's a big question. Today, we are not going to go there because it's very controversial. Okay, so the interest alone, just to service this mountain of debt, it is estimated to cost, just interest alone to service the mountain of debt is $1 trillion a year. Okay, come 2033, it's going to be in excess of $1 trillion just to pay the interest. And that's very, very scary. Okay, now, the inflation we are talking about, what are the driver of the inflation? Now, if you want to trace back to the most recent phenomena, why interest rate why inflation is suddenly surging? There was no issue during the pandemic, but it was during the pandemic, the fiscal policy. Now, when you want to manage a country, there are two major policies we talk about. The central banks are in charge of interest rates. That is called monetary policy. Now, the government through the finance ministry in the US is called the Department of the Treasury. That whatever policy they use, or the government itself through the Treasury will have to go and find the money if the government say, I want to roll out certain stimulus package. So when Biden came to power at the beginning of 2021, okay, that's what he did. He started a program called Save America Plan. That plan is basically a $1.something trillion. It was a huge amount in which the Treasury would have to go and find the money to give to President Biden to roll out his program. The program basically does is to put back into every American. The whole idea is that while they are locked down, they can't go to work. You know, they need to be able to spend, because at the end of the day, the US economy is one based on consumerism. If the US consumer don't consume, the economy is going to collapse. So he thought that was a brilliant idea, put money into everybody else's pocket and then they can spend. So what happened was most people were staying home, they got nowhere to spend, and most people spend on things that they need to work, okay? And we all know tech stock was doing very, very well during the phase where the market was, where we have lockdown, right? So tech stock did very, very well all the way until the tail end of 2021. And that's where the market peaks, and he has never recovered back since, okay? This year we saw a resurgence in tech stocks, but last year it was an unloved sector wants to do anything with tech stocks because the market has gone up so fast. The valuation was just crazy, and now we are at a point in time the valuation of tech stocks is again getting crazy. So that was the background why inflation started in America, and it's through the world, because after that they realize that inflation is a problem. They start to do the next best thing, which is to hike interest rates. Now the central banks has very crude tool to handle inflation, and that is the only way they know how is to hike interest rate, make the cost of capital expensive, make the cost of credit expensive. And the whole idea is that if it costs more to borrow, you will borrow less, and if you have less job security, maybe you will think about how to prioritize your spending. So the whole idea is to cut down demand. So they have hike rates from near zero to 5.25%. And this month, they have actually take a pause okay, because they have already broken something major in the financial center. Now, in the financial markets, just 3 months back, not sure if you can remember, we heard something called the bank crisis. Banks are falling like flies. Okay, we have Signature Bank that failed, we have SBB that failed, then we have First Republic that failed, then we have the big one, Credit Suisse, has failed. And all this got to do with very aggressive rate hikes that cause this stress in the marketplace. And mind you, this banking crisis is by no means over. We are likely to hear the resurgence of the more banks is going to fail. So this is something that we will have to understand and prepare for. Okay. Now, one of the key components of measuring the inflation is this thing called Consumer Price Index. Now, within this Consumer Price Index, there are components. Now, there is a headline CPI and there is a core CPI. Now, headline CPI is the raw numbers, taking everything into consideration. Okay, then they come up with an index, and this index is based on a comparison with the previous period. On a month-to-month basis, on a year-on-year basis, on a quarter-on-quarter basis, that's how they compare whether prices are higher compared to the previous period. So that is a headline numbers. And the other one, of course, is the core CPI. When we take out the very volatile component called the food and energy component, and then you take out these two components, and then you try to see if the underlying inflation is it as bad. But both are definitely not the best way to measure real prices, because inflation actually impacts everybody very differently. Okay, if you are a person living from paycheck to paycheck, of course your priority, your spending pattern is very different from a guy who has billions of dollars. He doesn't spend in the same way as you do, so he has different inflation compared to the guy in the street. Okay, so most of the people who are like you and me, we have rent, we have to pay, we have mortgages, we have to pay. If we have a car, we have to pay our car loans. Those are priorities. But at the end of the day, we have to put food on the table. So grocery prices is a big component of our expenditure. Now, do you think the billionaire is going to have a big portion of the income spent on grocery? Obviously not. We are in different planet. Okay, although we are in the same planet here. So the whole thing is that our spending patterns are very, very different. Now, when we look at this across the world, okay, the inflation situation is very different. While in the United States, at one point in time, in this time last year, okay, United States headline inflation is 9.1%. It's the highest they have ever seen in 50 years. Okay, now it is at 4%. So, okay, from 9.1 to 4%, that means inflation has come down, right? Not quite, okay? Because the component that make up this CPI, especially food and shelter, okay, in the United States is still climbing, okay? Ask any American whether inflation has come down for him, he will say that he's still experiencing elevated prices. So inflation is very different. When you go to Europe, when you go to UK inflation is quite serious. At one point, it was in excess of 11%. Okay, same thing in the Euro area. At one point, the inflation was in excess of 11%, and they have all since come down. In the UK, it's back down to 7%. In Europe, okay, it is coming down, but still, this month alone, we have seen central bank hiking interest rate again. Okay. When we know the Federal Reserve has already paused its interest rates this month, we have countries like Canada, Australia, the ECB, as well as in the UK, they have all started to hike interest rate. Now, UK has hiked interest rate more than the market expected. They have actually hiked by 50 basis points when the market was only expecting them to hike a quarter point, and they say there are more to come. So we are definitely facing inflation. It is not going away because most of the target in which they want to hit is just almost impossible to hit. The Federal Reserve saying that they want to bring inflation down to 2%, now it's 4%, so it's double of what their target is. The same thing for ECB. It is almost impossible to bring down inflation. Not with the war that is still going on in Ukraine, because one of the things about war is that war creates inflation. in a country that produce a lot of commodities like Ukraine and Russia, they export a lot of grains, okay? They export oil, for example, and those will be filtered into the general inflation picture that we are seeing, okay? So everywhere we are seeing elevated prices. Even in Singapore, we are seeing one of the highest inflation we have ever seen in recent memories. 4.8%. It may not be as bad as those in the States, okay, but it is very scary numbers, okay? Now, when we look at a growth prospect, inflation is one thing, but how does it impact the economy, okay? Now, when we look at the economy, most people say, okay, we look at the GDP. GDP is a gross domestic product, and this is the amount of goods and services that's produced within the boundary of a country. And we can see that there is a scale here. Okay, as far as the IMF is concerned, this is a projection between last year and this year. Now, there are two colors here. We have a light gray and we have dark gray. Dark gray refers to last year and the light gray refers to this year's projection. Now, you can see Singapore last year, inflation, the economic growth was 3.6%. Now they have revised it down to less than half, 1.5%. And there's a very real danger Singapore may actually slip into a technical recession following the Eurozone, follow Germany, follow New Zealand. So we are beginning to see major economies are slipping into a recession. Now, what you call a recession, it is 2 quarters of negative growth, and that will technically mean the economy is in recession. Now, in Malaysia, you can see the growth last year was fantastic, right? We got 8.7%, but this year they're looking at only about slightly more than half at 4.5%. And this is only a projection. We already see the ringgit has been falling, and that is also causing a little bit of nervousness among policymakers. Even among the citizens, I'm sure Malaysians will be very anxious why their currency is falling the way it did. And it is not just Malaysia, it's around the world, okay? So you can see even in the US, last year was 2.7. Now they expect only 1.6 for this year. The last quarter number is 1.3. So are we seeing that number able to hold on? Now, remember, if you look at US GDP, it was at 3.2% in Q3 last year, then it dropped down to 1.6. Now it's 1.3. So we are beginning to see that this is a declining gradient. It is likely to go if, at some point, if it continue to slide the way it did, at some point it will go into a recession. It may not happen now, but maybe in the 4th quarter of the year, or maybe in early 2024. So those are the projection, okay? But we can see that that is a slide into lower growth. When you have slower growth and high inflation, there is a term called stagflation. Stagflation means we are still experiencing high prices and lower economic growth. Now, a recession is actually quite normal. It's just part of the business cycle. You have boom, you have bust. It is basically to correct previous period of excessiveness, okay? So there is a normal business cycle. But if you try to avoid a recession by trying to massage the economy to avoid a recession, what comes next is going to be unpredictable, okay? Now, you want to see how bad a stagflation is, just look at Japan. Japan has never fully recovered from the collapse in their economy because of stagflation that lasts for 3 decades, means 30 years, okay? So we can see that it's taking out the vitality out from the economy. Young people these days have no goals, okay? They just want to survive. They don't want to start a family. They don't want to have kids. They just want to, basically make enough to survive every single day. And this over a long time will bring with it problems, okay? So this is something that we all have to consider, because at some point, if we are not careful, our economy will also go into that kind of stage, okay? Now, economy in recession. Now, can you see this is the picture we have here. 3 major economies. We have Germany, Euro area, and New Zealand. And why am I picking these 3 economies? Because they have just recently slipped into a recession. You can see that the dark green is obviously Germany. The light blue is light gray is the Euro area, and New Zealand is in the brown. And you can see this Q4 of last year and Q1 of this year, 2 quarters of negative growth. So this is what I call a technical recession. So this is confirmation that the major economies are slipping one by one into a recession. It's only a matter of time it catch up with us, okay? Like I said earlier on, Singapore has run a danger of slipping into a technical recession. And Singapore has always been the canary in the in a coal mine. If Singapore experiences economic difficulty, the world will soon experience it. If Singapore recovers, Singapore is also one of the very first economy to recover from the pandemic. So after Singapore recover, the rest of the world also see an expansion of the economy. So when Singapore slide into a recession, soon after, the rest of the world will follow suit. And that is something that we also want to take note of, okay? Then, of course, we have this ongoing war. This war needs to stop. This war, the day it doesn't stop, this inflation story will remain, okay? And because it takes away the creative part of the economy into something very destructive. You don't create value out of war. You create destruction out of war. So instead of spending all these resources on fighting a war, you could have deployed those resources in a more, I would say, in a productive manner, okay? That is, of course, logical. The longer this war stretch, the longer the inflation story will remain. The whole idea is, how are we going to end this war? It looks like both sides doesn't want to come down from their horses, okay? On the one end, the West needs to defeat Russia, and Russia cannot be seen to be defeated. So both sides are now at a standstill right now. And what we are worried is that this war will escalate to something else, much, much bigger, that will involve the rest of the world. And that is a catastrophe, okay? So to watch out. Now, inflation plus lower growth is equal to deflation. Now, this is another thing, right? When you have deflation, now, which country right now is already experiencing deflation? Deflation means we have no inflation. So maybe I have put down here, maybe this is a mistake here. No inflation. No inflation plus lower growth is equal to deflation. Deflation means prices are not going higher. Prices are falling. If you have been reading the news, China is experiencing deflation. There is practically no inflation in China, as if you believe the official numbers, okay? And what the Chinese are experiencing is prices are coming down. But when prices are coming down, they also see less job being created. People don't dare to spend, okay? And the unemployment rate among the youth is very, very high. Every year, they have 250,000 graduates that comes into the market, okay? And this graduate, the moment they graduate, they become unemployed. And don't forget, previous batches of graduates are still looking for jobs. So this, accumulatively speaking, are the most productive part of a person's lifespan, right? The most productive part of you is just after graduation, you want to go out there and, you know, make something for yourself. And when you step into the real society, you find that there's no job. And this is a problem right now. China is experiencing deflation. No inflation, but lower growth. And why is it prices are coming down? Can you imagine if you are a business owner? The only way for you to survive as a business is to cut prices, because your consumer have no spending power, no job. How are they going to spend? Okay, even you have a job, you're also worried about your job security. Okay, so there's a lot of issues, because we all know China has a lockdown, a very severe lockdown, and only started to open up at the end of last year. So everybody was rubbing their head. China now reopen. They have all this pent-up demand. Maybe they will start to provide the ballast to the global economy. That did not happen. Okay, so now we have to go back to the drawing board and see, okay, what else can we find? There's simply no growth anywhere. Okay, there's no one major economy that can be providing the engine of growth going forward. So we are looking at a situation in which elsewhere prices are still high, and everywhere else, like except China, is experiencing something exact opposite. Okay, whereby prices are not going higher, but they are not celebrating because there's no business opportunity here. Now, one of the reasons why people are doing de-dollarization is because earlier on I did mention the West, in an effort to defeat Russia or to punish Russia, has denied them the use of this payment system. Everything that you do in the international trade have to be using the dollar, and the dollar can only be cleared with a system called SWIFT. This is a payment system that banks use, and now they deny Russian banks from using this system. So everybody look at it and say, look, tomorrow, if I'm no longer a friend, or if I offended the United States, could they do the same thing to me? So now everybody say, maybe we need a better system. We need to get out of this current system and devise our own network so that we can actually do trade among ourselves. So lately, I think next week we are going into a very critical period on January the 4th. January the 4th, two major things are happening. BRICS is having a meeting, no, or not BRICS, I would say that it is the Shanghai Economic Cooperation, okay? The SCO, they are meeting in a virtual meeting, and the host is going to be India. They're going to talk about how they're going to come up with a BRICS currency. And the other thing that's happening on July the 4th, beside the US celebrating their Independence Day holiday, is the start of a new digital payment system in the United States called FedNow. Okay, so those two events are critical events. Okay, something big will happen out of the event. Okay, so because the West has confiscated other nations' assets through the fact that they are using dollar and they are using the global financial system, now people are looking to develop their own alternate systems. Okay, and this is the reason why we are seeing this trend to de-dollarize from the United States, basically design their own payment system, design their own currency, you know, and how to trade among themselves. We have been seeing that since the start of the war, whereas Russia has been selling the oil to friendly nations, people like India, people like China. If they buy their oil, you can see that they are paying in currencies other than the dollar. Okay. Earlier on, we did mention BRICS. BRICS stands for Brazil, Russia, India, China, and South Africa. And they are going to meet in South Africa next week, and we'll see what happens, because they are going to talk about how to formalize the relationship. Iran has already proposed a system to replace the SWIFT system among themselves. Okay, so what else can come out of that, we do not know, but it's definitely happening. And I think this trend is going to accelerate further, meaning to say at some point the dollar will lose its current premier status as the only global reserve currency. And of course, the dollar is not going to disappear overnight. It's still going to be around, just that the prominence of the dollar will be reduced. And that will have knock-on effect, because the dollar reserve status, once it is shaken, will actually impeach the US ability to actually continue to borrow by issuing treasuries, because nobody want to buy anymore. And if there's a problem, then who else is going to buy? They can't ask their domestic banks to buy, because the banks are all up to their neck in all these treasuries. And the Federal Reserve, the balance sheet has ballooned so much, because over the years, first we had the pandemic, first we have the global financial crisis, then we had the pandemic, and then we have this $1 trillion Save America plan. And all this is causing a lot of accumulation of all these treasuries. Right now, they are underwater. That's why the banks are dying, okay, one after another. So these are proofs that we are beginning to see a global shift that will continue to take shape. Now, here we are going to talk about how market is going to play out. I'm going to give you an outlook on the various metals here. Okay, here you can see this is a XAU USD gold price in dollars. Okay, but gold can be priced in any currency, but the one that we are more familiar with is the gold price price in US dollars. And XAU is actually a Latin symbol. Of course, USD, we all know is US dollars. Well, why is it called local London gold? In the olden days, when I was a gold dealer, we all know called local London. Local means it's a Latin form, say, for delivery in London. So earlier on, I did mention, right, London is where you do all your physical delivery. Okay, the spot market. So there is a market in the spot, and there's a market in the New York COMEX exchange. Okay, so this is the price reflecting the cash market. So overall, you can see that the market has actually gone to an all-time high just recently. And this is a monthly time frame. In May, gold price went to a record high to $2,081.46. And it has never been traded at such price before. Okay, but it has since come back down. Even up to this afternoon, when I was updating my chart, prices was coming down. This afternoon, it was at $1,915. Last night, it went out to $1,911. So right now, is the price of gold going to go up? And if it goes up, or does it come down? Why do I say there is a case for buying precious metals? Now, for those who have not already bought, okay, this could be your last chance to get in on the precious metals, because what is going to happen in the future, we can see that I have a projected target, 2066 $2,663.60. And this is not the ultimate. This is just a projected target. Meaning that this trend has been going up, and this is a monthly time frame. Means one candle bar here represents 1 month of trading activity, and the trend has been going up since 2015. It has went to a high, came back down over a period of 3 years, and then start to stabilize in 2015, and it has started to go up again. This trend is an uptrend, meaning to say what we are seeing right now in terms of the gold price coming down to test the 1900 is basically seen as a technical reaction. Now there's this very long-term up channel here. The market is just sitting at this top of the channel here. Can it break it? Even if it break it, it is still a buy, in my opinion. This is the outlook for the over the longer time horizon. What about the weekly time frame? This is the same chart, okay, but in the weekly time frame, and the market looks like immediately the market is coming down. Currently it's $1,915, and most likely it will continue to go down a little bit more. And over here you can see there's a triple top here. Now triple top is basically a chart pattern. Prices has actually tried to rally, and these are not absolute market. Of course, when you look at it on a absolute, why you will always find that if you put a stop, then the stop was taken and the market reversed. So every time you can see market, okay, or 2075, 2070 is the top. So let's say if you are selling, you will logically put your stop where? Put it just above the high, the most recent high, right? Or the next obvious high. So the market went up just when you think the market is going to fly, okay, you take out your stop and then come back down. Okay, so there is this thing about the correct way to place your stop and the wrong way to place your stop. Don't place your stops at the most obvious level, because everybody can see where the stocks are accumulating. Okay, so it was no surprise after the market went to an all-time high, it come back down, and it has been coming down since May. That means to say it has been 2 months in the making, and it does look like it may continue to edge a little bit lower. At some point, the market will stabilize. We only have about today is Wednesday, so Wednesday, Thursday, Friday, we have 3 trading days before the month end. Okay, there is this thing every time we have a period that ends, whether it is a weekly, whether it is a monthly, the sentiment may change. I suspect that we probably will see a low this month, okay, before we see a rebound in July. So let's say if you are trading knowing that there is likely to be a bottom right now. See, the market is like that. Market is like it's like a catapult. Okay, you have to stretch the rubber, and then once you release it, the energy will propel the price higher. So this is the same thing. You need the price to go higher. You need to pull the price down, and then release it for the price to shoot beyond the 2081. Okay, now the next 2 months is going to be quite critical, because I do expect a bottom to be in place this month. We only have 3 more days to go. So who knows? Okay, at the rate is falling, maybe it will test and even break the 1900. And then prices like to rebound in July and then come back down again in August before it finally go up. Okay, something will have to cause this market to fly beyond the all-time high. I suspect it is not economics, it's not inflation. I think it's going to be the war in Ukraine. Something bad may actually happen, and I do suspect that it's going to be an escalation of the war that's going to cause a major panic in markets, okay, that cause the price to go up beyond the all-time high. So that is the reason why I say this is a great time to have this presentation, so that you know the background story, why I think it is a need for all of us, whether you are an investor, whether you are a trader, to look to accumulate. Okay. Now, this is the daily time frame. Again, this is trying to narrow down, and then going down to the lower time frame to see a pattern. So right now, like I said, this very long-term channel, the market is just sitting above it. Can it go down further? I think it can, and there is even a risk that the market may even go down to below 1900, maybe to. For the time being, the target for the daily time frame is about $1,860. It may or may not get there, but essentially this pullback here is an opportunity to buy, not to sell. If you're not already sold, this is a lousy time to consider selling. Okay. Now this is the even going down to the even lower time frame. Okay, these are for people who actually wants to trade. Okay, so as I was updating my chart, the market was at 1,910. Remember, the first chart I updated was $1,915. in between my update, the market has gone down by another $5. Okay, so you can see the prices is at the lowest it has ever been since the high traded at $2,081.50. So it will continue to go down, and I have a target here. Immediate target is $1,902. Thereabout. It is not exact science. It is just a target for me to actually consider whether I should take profit or whether I should go in and look for buying opportunity. Right now, like I said, it's a poor time to be selling because you don't want to be selling at the extreme low here. If you have not already sold, then this is the last time, the last place where you want to sell, right? So now what you can do is, if you already sold, then look to take profit around 1,902 and then wait for a confirmation or some kind of sign that the buyers are in. Then you want to look for buying opportunity. Okay, this entire sequence may end within the next 72 hours. Okay, that's my take. Okay, over in the silver market, we are also doing the same thing. Starting from the monthly time frame, we are going to look at the structure is very different, but by and large, you can see that over the longer period of time, this rally in silver has started way back in even in the 2000s. Okay, so the high traded was $49.81. This is the record high. Okay, so we can see around the $50 level, there is going to be a lot of pressure. So right now, of course, we are very far away from $50. So the last traded price was $22.91. Okay, so at the market price here, we can see that the price, the general trend is up, but we're having a counter trend, and right now we are still in the counter trend, but we are getting very close to ideal buying price. You can see that I have a buy zone here, anything between $13 and $17. I want to look for opportunity to buy. Okay, the lowest traded was $11.64 at the beginning of 2020. Now this is March of 2020. What happened then? We have the pandemic, right? So the pandemic caused the price to go up to $30. That was a very fast move to $30 from $11.64. So what we are seeing here potentially is two possibilities. Market continue to drift lower, go back into the buy area, and then hopefully you can buy it at a much cheaper price. And the target for this move is $36.50 to as high as $40. So this is just a corrective. That means to say this is not even the most optimistic. The optimistic one is a price target at $75. Can the silver prices go from less than $23 to $75? That's a huge move. Okay, I'm not saying that it's going to happen immediately. It's going to take time, but eventually, the way I look at it, the global outlook is very poor, and all we need is a panic. What can cause panic? We already saw what can happen in a pandemic, which we have never seen before, whereby we have a global lockdown. Can you imagine lockdown the entire global economy? It has never happened before. Okay, so something like this, or even worse, can cause a major run in precious metals. Okay, at a time when nobody has beginning to have lesser faith in the supremacy of the dollar. So a lot of things are happening. If the dollar is no longer going to be trusted, there must be something that will have to hold value. You're not about to hold RMB for sure, because RMB is not going to be the replacement for the dollar. So if it's not the RMB, what other currencies? You look around, there's no substitute. The euro is also have its own problem. The Japanese yen definitely have its own problem. This year, Japanese yen alone against the dollar, it has fallen for what, 13%. Okay, and against the euro, it is at a 15-year low. So you can imagine all major currencies are equally bad. So there must be something that can hold value, and I speculate it is going to be something tangible, something solid, something that you can feel, rather than pieces of paper that has been losing value over time. Okay, so this is my case. Now, over the weekly time frame, the market right now is looking to bounce from a low of $17.55. I think the market may actually bounce all the way to $27 to perhaps even $28 before it come under resistance. So if this trajectory is true, then the immediate upside is there. But right now we are seeing prices has been coming down for 2 weeks in a row. Will it continue to go down? Never say never. Okay, but what I'm saying that the trajectory is telling me that the overall trend is up. I want to be buying, and if the market can come down to $16 or $17, I want to be buying. Okay, so from the investment point of view, look for levels to buy. Okay, this is definitely not a case for you to sell. Do not sell precious metals. Okay, especially silver. Silver this year has been outperforming gold. Okay, so it means that when precious metals price goes up, silver tends to outperform gold this year. So it may remain the case because silver actually has a lot more utility than compared to gold. Okay, people buy gold, they buy and then they put it in a safe deposit box and lock it away. Whereas silver actually have industrial uses, more application than gold. So gold, silver tends to outperform, and I still believe that it will outperform gold over time. Okay, so this is the outlook. If the price comes down to $20 to $21, it is definitely a buy. The only time I will change my view is the market break below $19.90. But until it happens, I am going to be buying. Okay, and then of course, when you look at the lower time frame, the 4 hours time frame, this is what we are seeing as the point of update. The market has been coming down, so it is a counter trend that started at $22.11, and this remains my outlook. I'm still looking for levels to buy, and yes, we may be seeing immediate weakness, but overall, this market is a buy. Okay. Okay. If you are not convinced that you have to buy metals, for those of you who are in Malaysia, you already knew that ringgit has been falling like a rock, very much like what's happening in the Japanese yen. And whether it is against the dollar or against the Singapore dollars, we know that the ringgit is currently falling. And if I show you the gold price based in ringgit, last month it was a record high, 9,264 ringgit, okay, per troy ounce. So we are saying that this is a very long history, you know, coming all the way from the mid-1970s. So this is a appreciating asset, meaning to say the ringgit has been falling since the 1970s. Okay, so for Malaysia, it's even more critical that you own precious metals because your currency is not able to hold value, regardless of the reason. But the chart here doesn't lie, right? So it says that the market may even go even to 11,750 ringgit. That means that the ringgit will continue to depreciate in when you compare it to the price of gold. So when you look at the price of gold relative to another currency, it is just another currency pair. A lot of people do not understand when you trade gold in different currency, it is just another currency pair. Okay, so look at it from a currency perspective. You can see why this trend, once it started, is very difficult to reverse. Okay, and this trend, the trajectory is telling us that this thing is going to surge even higher. Okay, and this is just the immediate projected target. Who knows where ultimately this thing will go? Okay, so when you look at silver, this is the money time frame. This is the silver. Sorry, this is the silver. I should have changed the symbol here. XAG in ringgit term. The chart looks very different. That means to say that when you compare gold and silver in ringgit term, silver is still a bargain. Okay, so if you have to decide between gold and silver right now, you look at the price chart, or maybe it is advantageous to accumulate silver right now compared to gold. When you convert back, eventually the silver price in ringgit will have to show its international pricing. It is definitely more advantageous to be buying silver. So maybe for those of you who wants to invest, not necessarily trade. You don't trade the gold or silver in ringgit term. You trade them against the dollar. But this will give you a kind of perspective. Okay, so this is my primary target: $152 in their silver itself, where currently it's trading at just above 100 ringgit. Okay, so by and large, this is a primary target, but the market that I'm looking at is in excess of $200 per ounce. Okay. So we have come to the point whereby I have to take questions from you. So if you have questions and have no time to ask me or do not know what to ask me now, you can always join me on my weekly webinar. This is the QR code. You can actually take a scan of this QR code and then can come to my weekly webinar for free. Okay, you can ask me any questions so long as it's related to the market. And if you want to know what is the lock-in detail, you can always visit me on my Facebook. Now I will take questions now. Anybody has questions? It's time to ask me.
All right, thanks, Daniel. Okay, let me just see. Is there any question available? One moment. Just scroll through trading live. All right. Actually, yeah, we did have a question earlier by one of our participants. Okay. Earlier you did mention about Ukraine. how will Ukraine actually affect the gold price? Basically, is it due to the fact that there's a lot of volatility going on there, and then it will affect gold price and affect it to shoot up? Is that how it works?
It's indirect. Okay, when a country is at war, nothing gets exported. Okay, right now they can't even export their grains. Okay, because Russia has blockaded up the Black Sea, which is the only port they have to for exporting their goods and services other than transport it overland through Poland. Okay, so right now when a country is at war, nothing gets exported and everything else will cost more. So if you believe that gold is a hedge against inflation, when things cost more, you definitely will want to hedge it against something that can actually mitigate the inflation. So gold is still perceived to be that, but beyond that, like I say, I believe if precious metal prices goes up this time, okay, it is not due to economics. It is due to the progress or the escalation that I see in the war in Ukraine. Right now, there's a stalemate. They have been fighting for what? How long? Into the second year. 1 year and 4 months they've been fighting. And right now, there's no clear-cut winner. And both sides cannot be seen to be losing. And after the weekend mutiny in Russia, definitely the Russian military will have to reassert their authority, and definitely they are going to come in with something more severe because they have been dragging. This war need to come to an end. And one way to end the war is for one side to decisively win the war. Okay, so if Ukraine cannot be seen to be losing, the West that has been supporting Ukraine will have to offer it more weapons, and maybe at some point we'll have to send in soldiers to fight the war. That happens, the entire whole Europe will go into up in flame. Now, World War I happened started from Europe. World War II started in Europe. World War III, if it happened, it's going to start from Europe. Okay, so the Europeans can never unite because there are simply too much differences among themselves. Even among the NATO members, they are not totally united. So if we ever seen they actually send military forces into Ukraine to fight the war against Russia, Russia already said, if you send in NATO, that means it's all out war, and everything else, that means that they do not have to hold back, including the use of tactical nuclear weapons. And this is a troublesome thought. So if that happened to that stage, this is exactly the catalyst which I believe that will cause prices of precious metals to surge, okay, beyond what we have seen so far.
I see. So basically, as you say, like a war can take place for many, even years and years. So we will see an increase probably in prices of gold as time goes on. As the war gets more and more intense, it's going to get more and more towards the gold price as well. That means it keeps soaring and soaring. Is that what?
Yeah, but right now, you see, Ukraine, the war in Ukraine is just one example. There are many tensions in many hotspots. In the Middle East, for example, Israel has always been not happy with the idea that Iran may possess a nuclear weapon. So at some point, they're going to preempt them by striking them before they can even produce a nuclear weapon. So if the Middle East go up in flame, what is going to happen to the price of gold? Price of oil, okay? Yeah. They are major producers, right? So if oil prices goes up, it's definitely going to bring gold along for the ride, okay? And then we have the Far East, okay? Whether it's in the South China Sea or whether it's in the streets of Taiwan, that is also another hotspot. So there are potential hotspots that can go up in flame, other than the one that we are seeing right now, the hot war that's ongoing in Ukraine. So all this tension can be the catalyst for much, much higher prices in both gold and silver.
Noted. Thank you, Daniel. Yes, so it's actually kind of true because we saw such a thing during even the COVID pandemic. We saw such rise in prices of gold and silver due to this. I think this is something also similar. So it's safe to say like economic crisis can also cause such prices to shoot up for gold and silver. Am I correct?
Yes, and it is not just contained to precious metals. Everything else is going to change. Yes. Okay, and the current equities valuation is it sustainable? Okay, for one, you have to ask those questions. Is the problem that we saw in March in the US in terms of the banking crisis, is it going to come back rolling all over again? And what impact it will have on equity markets, on the dollar, on precious metals, on everything. So everything is connected.
Everything's connected. Yep, agreeable. So I guess this would be the only question. Let me just is there any question on our Zoom live? All right, no, I guess this is the only question right now. All right, so yeah, this is actually a quite interesting session. So for those of you who are interested in trading and you guys have a very big, which I know in Malaysia especially, everyone have big interest in trading gold. This is actually a great way for you guys to get started. So keep track of all the economy session, like what Daniel said, keep track of all the markets and stuff, like, if there's a war, if there's an economic crisis, this is actually something that can help you with your gold trading. It's always important to keep track of macroeconomic factors, guys. All right, so before we end tonight's session, just want to share with you guys a little bit more. All right, let me just pull out. All right, 1 minute, let me just share this with you guys. All right, guys. So for those of you who want to join the our market insight done by Daniel, it happens every day. So you guys can actually use this link. All right. So we will also be sharing with you guys. I will pass you guys my WhatsApp number. For those of you who want the link, you guys can ask me as well. All right. For those of you who can't use the QR code. Okay, so one thing I want to let you guys know that we do have a special offer from our broker partner Zen Phoenix. For those of you who have not joined our broker partner Zen Phoenix and want to get started in trading after tonight's session, we do have a special offer for you guys. So for the first time trading bonus, what we have is for those of you who deposit 100 USD, you will get an additional credit bonus of 100 USD. So total you have in your account from just depositing 100 USD is 200 USD. Okay, for those of you who wants to have additional funds in your account, you can deposit 200 USD. And we'll give you additional of not 100, but 120 credit bonus. So total will be available in your account will be 320 USD. And also we do have, for those of you who are intermediate or advanced trader who already trade in big sums, you can put in at least 500 USD and we will give you a credit bonus of 200 USD and total up your account to 700 USD. So this is only limited to up to 20 individuals today. So we have individuals from Zoom call, we have it on Trading Live, we have individuals on YouTube as well watching this live right now. So for those of you who are in either one, you can participate in this program. All right, so for those of you who are interested, you may scan the link over here and you may contact me to ask more on this and provide you necessary links to register for the credit bonus and the deposit. All right. So with that being said, thank you so much for tonight's session. Thank you, Daniel, for an insightful session. We do appreciate learning a lot. So ladies and gentlemen, we hope that you have gained a lot. For those of you who have any further questions on trading and how to get started, you can always contact me as well through this QR code. Thank you, ladies and gentlemen, and have a good night to you all.
Thank you very much and Selamat Hari Raya Haji. Selamat Hari Raya Haji.
Yes. Selamat Hari Raya Haji, guys. Thank you so much.